Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Thursday, gang. We've got a lot going on in the next 2 days, not the least of which is let's take a quick peek at the economic calendar. Well, I've got this handy. So I'm going to jump on over to Forex Factory. And what we've got here is here we go. So if you've never been to Forex Factory before, don't let the Forex word throw you. This is a great global economic calendar. Very thorough, lets us know what kind of data came out of Europe, what kind of data came out of the UK. Core PCE, gang, this is the Federal Reserve's favorite, absolute fave inflation gauge. This is the one that they use for their models. This is the one that they're referring to when they talk about inflation. And so if that comes in line, now this was 0.2, expected 0.2, previous was 0.2. Overall, if we look at this, if you're wondering, Rog, does this send, let's look at it in, two, if not three places. Let's look at the reaction at 8:30 and three places, because you might say, Rog, what does 0.2 mean? It's not a surprise. But, we're always in our mind thinking, is it good or is it bad, right? So let's jump on over to here we go. Let's jump on over to the charts and pull up. Let's start with yields. We'll take a look at the 30-year. Oh, there we go. Sorry, nudge my own camera here. All right, let's take a look at the 30-year. Come on, camera. There we go. We'll take a look at the 30-year and we'll take a look at the 10. So here's a 30-year. This is the ZB. Let me open this up a little bit. And by the way, on the far right, we've got the daily time frame. In the center, we have the 1 hour or 60-minute. And on the far left, we have the 5-minute. That is my preferred day trading time frame. It's also the one that's the easiest to gauge a reaction to a hot zone. So if I take a look at this here, here's my 8:30 candle, the one that goes in both directions like crazy. I call it a wiki candle for obvious reasons. It's not good. It's not bad. It's as some of you might suspect, it's nothing. It's really not that telling. Inflation's not ticking up. It's not ticking down. So then we ask ourselves, what does this mean to the Federal Reserve? Everything, generally speaking, this is not going to derail, right? This is not going to derail the higher yields that we're seeing overall. This is not going to derail the higher equity prices. We're seeing indices rally. We're seeing equities generally, broadly rally. And really, I think here's the most important thing if we're looking for just a really basic assessment. Right there, we're trading higher. I mean, in the most basic way, are we higher than yesterday's close? And so we can see that really clearly. How about the ZN, our 10-year? Let's take a peek here. Right? Same thing. There's a lot of volatility because we're not really sure. Bulls think, yeah, let's go higher. Bears think, yeah, let's go lower. Coming in at 0.2, not clearly better or worse. Look at the confusion. Let the candlestick tell you the reaction. Let price tell you the reaction. Even let volume and volatility tell you the reaction. By the way, in terms of reaction, was this a volatile reaction? Some of you got a really close up-look view of the power of the hourly price movement range. This is a unique tool, gang. This is something most traders don't even know exists. This is very much a regular part of the conversation here in Charts and Coffee and in the Sector Secrets Mastery. Is this a volatile reaction? Well, this is volatility resistance, and this is volatility support, and this is pretty much where we are. Yeah, not so much. So we really don't have a lot to say or think. And we have non-farm payroll tomorrow. So there is that. Let's go take a look at, so we looked at the 30-year, we looked at the 10-year. Let's take a look at the dollar. You might say, Rog, that's a funny way to pull up the dollar, the euro. This is the best way to pull up the dollar. Pick the currency that's weighted heavier than all the other currencies in the basket combined is the euro. And here we can see, well, here's a lot of volatility, but let's remember a couple things. Look at this chart. On the far right, are we heading lower? Granted, we are heading lower. Are we higher than yesterday's high? No. Are we below yesterday's close? Yes. Are we below yesterday's low? Really, this candle is going nowhere. it is a little bit of dollar strength. So there's a push-pull there. Let's take a look at our NASDAQ. Let's take a look at how equities are reacting to this. We had a uptrend. And by the way, how many of you were at the webinar last night? I hope as I'm going through this, you're already running the sequence, right? You're already running the sequence that we talked about in the webinar that we're going to dive into with all the tools needed in the class. Step 1, right? Step 2, grab candles. Step 3 are HPMRs, right? What do we have? We're closing in on our slow stochastic in a neutral environment heading down towards the low. Sequence, right? Stick with the sequence. Consistency, right? We talked about being in the stones versus being a one-hit wonder. We talked about, reducing your trade to a scratch-off lottery ticket where, hey, I spend $10 and maybe I make 1,000, right? Cool. But can you make a career out of scratch-off lottery tickets? No, but a lot of traders try to do that with their trading. We want the boring consistency. And as I mentioned in the webinar, a lot of times consistency masks around as boring, right? It masquerades as boring, as boredom. Boring is great. Sequences. Discipline is freedom. Discipline's kind of boring, isn't it? So yeah, 1, 2, 3. So just kind of refresh your memory. By the way, if you did not catch the webinar, it is available. The replay is out there. You can catch the replay. I probably got kind of teachy in the webinar yesterday. I kind of started breaking things down in a way that, as I mentioned in the webinar, I always like to drop at least 3 things that someone can use the very next day. And I think that was really a big part of it. We talked about margin requirements, cash accounts. We talked about trading times of day. We talked about the sequence, the tools that I use. So definitely do check it out. Linda says, thank you for that. I enjoyed it. That was great. I know that a lot of folks are at the tail end of their summer break. We're going to be at it again next week. So we're not done. Those of you that join the class, great. You get the tools right away. You can start using the sequence right away. Those of you just kind of coming back from summer, we're going to dive into even more next week. So heads up for that. We've got another webinar coming up, and we're going to dive even more into my August trading with even more detail and keep that conversation going. So keep an eye on your email for that next webinar. All right. Next up is the Dow. Let's see what's going on with the Dow. And let's take a peek here at our YM. Same idea, gang. We were bullish. We're heading down to oversold support. We're above yesterday's close. It's hard to be a bear. And if you've been in the mastery and if you've been following along with the top tier outlook, look, we never succumb to the fear mongering ever. Fear is never going to be a reason to put on a trade. We're not trying to pick tops and bottoms. What we're trying to ask ourselves is, what's the probability, not the certainty, but the probability that the equity markets will overall go up? Very, very high. Why? We're at the tail end of a tightening cycle. Earnings, gang, 2 quarters of earnings. Have they been a poor showing? Not at all. Earnings have been pretty good, actually. Right? So despite all the reasons that we would think, higher yields, stronger dollar, that the equity market should be tumbling, we trade what we see, not what we think. Traders trading what they think, they've probably been picking tops all year long, very unhappily. We don't hate our money, do we? It may not make sense, but if that's what the market is doing, that's what we follow. That is our job, right? So I hope that makes sense. So Robert asked from our essentials room, what are the arrows, green and magenta, on my chart? Sure. Well, actually, Robert, one of the things that the Trish boss, as we endearingly call her, made sure we have in the class is something called the Darvis 3.0 or the Darvis signal. So those arrows belong to these automated support and resistance levels. And what this is a pattern signal. All right, what does that mean? A pattern signal. Most alerts or signals on a chart say something has happened, now buy, now sell. And in my experience, they're incredibly laggy. The market's already made an extreme move and the signal says, oh, we buy now. I don't want such late notice. Let's juxtapose a alarm clock that goes off at 6, jars you awake, to the relative peacefulness of a really good GPS or maps, right? Maps tells you in 100 yards, in a quarter mile, turn left. It tells you in 1 mile, take the exit. So that's what this is designed to be. Not an alarm where you're almost all of a sudden scrambling to get in or get out, but rather in a quarter mile, exit. And it sets up a very cool price pattern that belongs to the Darvis indicator, the Darvis 3.0. And that's what those belong to. And that's the main difference from the Darvis 2.0 to the 3.0. And the 3.0 with the signals is included in the class. There's a lot included with the class. So do check that out. It's a ridiculous offer. We make sure we stack those classes where you've got everything you need there. So thank you, Rainy Days. I enjoyed doing it. I really did. It was a great opportunity to stop and say, look, not every month is going to be July, right? Where it goes straight up. And I'm not here to tell you that in 30 days, I 20x'd an account. All right. I'm here to be a very consistent trader. I do webinars and I do and I do our mastery for members as if we were all in the same room, and I'm going to have to meet these folks for dinner on Friday, or we're going to have to meet family on Sunday. We get to do this together. So in my mind, I can't start talking in hyperbole. I can't start taking outsized risk. It's got to be consistent, gang. Please do not succumb to this idea of ridiculous rapid account growth. It's only going to hurt you. And I find that the older I get, maybe the saltier I'm getting. Yeah. Consistency is the key. I know rapid account growth is very sexy. I get it, but consistency is the key. And that's what we talked about, the one-hit wonder versus the Stones. I want to be 77 years old. How old is Mick Jagger and Keith Richards? How old are they? Well, Keith has pickled himself. He's going to live to be 900. Let's face it. Keith will be playing for our kids' kids. Yeah. How old is Mick Jagger? I don't even know. That's what I want to be. That's what I want to be. So consistency, gang, that is very much the theme. And I mean that sincerely. If we can be consistent, we can make money in July when the markets are going straight up. We can also do well in August, right? Where the markets are not going straight up. Okay. So let's, I think Keith Richards was here before the dinosaurs. Joe, I think you're absolutely right. I think you're absolutely right. All right, Zed is asking, what is the name of the white lines I use to find entry spots? The white lines. So there's two sets of sort of these white indicators. In the webinar, I talked about whether or not price is above or below the white dots, the propulsion. So like I said, we went through the sequence a lot. So if you got a lot out of the webinar, you definitely want to attend the second, and you're going to love the class. So just imagine what I'm going to brain dump on you in the class. So that white dot is like the equator. Are we on the bullish or bearish hemisphere, if you will, of price action? We also have the white lines of the HPMR, which is another indicator included with the class. This is the least of the hourly price movement range, or the most aggressive volatility-based support or resistance level on the chart. So there we go, Zen. Thanks for the question. All right. What else do we have here? Yeah, in case you missed it. I know a lot of folks might have. You can check it out. The replay can be found at simplertrading.com/consistent. All right. Let's see. Questions. Happy PCE Day, says Christian. For tracking inflation trends, I recently showed a graphic. Yeah, Christian, when we're in the room, I'll bring that up again. I don't think I have the link handy right now. But yeah, I can bring that up in the room. You bet. That inflation graphic, yeah, we'll take a look at it today. But remember, that inflation graphic is actually based on the CPI, not the PCE. But yeah, and we can also graph out the PCE, because remember, the Federal Reserve uses that one. Mind the Gap asks, with the OPEC decision coming, but unscheduled, would this be a buy the rumor, sell the news situation, shorter time frame situation? So with crude, the overall bias that I have with crude and crude stocks, as well as natty gas stocks, is definitely up. With the storm going through the Gulf, I've been in Florida a lot of years. Usually I want to be bullish in situations like that. A lot of the storms now, gang, are not hitting the east coast of Florida, which is very much not a crude oil refining or pipeline issue. When it goes up into the Gulf, we'll usually see a little bit more bullishness. And crude's already been heading higher despite weather. So as far as OPEC goes, OPEC as a central bank of crude oil, right? That's really what they are, controlling the production. Production, printing, what's the difference? Nothing. OPEC is a central bank. Their currency is crude. I'm going to continue to be a buyer. Yeah, I'm going to continue to be a buyer. And so if I can get a 1 hour or a 5 minute day trade or short-term swing, great. But we can actually start to buy the dip on CL, mind the gap, and buy the dip on XLE and OIH and XOP has been valid. In fact, by the second week of this month, last trading day of this month is today, by the way, gang. Heads up, end of month is tricky. End of quarter is even trickier, but end of month can be tricky. The earlier part of this month, the first 2 weeks, we had quite a few swing trades. Then came Jackson Hole, then came all the other macroeconomic needle movers. But a lot of my emphasis on the overnight exposure is in energy. So I think it's a really good place to look. So mind the gap. I think you are pointed in a great direction, whether that be day trading or overnight exposure. Yeah, I absolutely agree with that. Tech Trader Joe, when or if we do take in getting into a long weekend for the market, does it at all affect our opening market watch list building? For not only today, but really tomorrow, I'm thinking it does not. Oh, so when we go into Friday, we've got a long weekend coming up. Monday, the markets are closed in the US. So does it affect our watch list building? Think of it this way, Tech Trader Joe. Let's talk about the different kind of trading. Non-farm payroll comes out Friday at 8:30 a.m. Eastern, as you know. That's likely going to set up swings either Friday or Tuesday, right? No trading on Monday. So that swing window around the non-farm and a little bit of clarity in terms of a massive macroeconomic week, PCE and NFP, between Friday and Tuesday, we're going to likely have some opportunity for swings, 1 hour or daily time frame overnight. But if I'm thinking about today trading, that's really what I want to start calling it. What is day trading? It's today trading. I did a whole video on it on Tuesday. Today trading. What is the watch list today? And that is something we do in the room. And that's a process I'll teach in the class. But that is something we do in the room each and every morning. Most of you know the first 15 to 20 minutes are highly dedicated to what? Slinging contracts? No, it's up to figuring out what's the directional bias, which direction are we biased in favor of, and which stocks are going to benefit most from that bias, right? Always watch list building, focus list first. So I don't know about the long weekend factoring that in, but we're going to open every session with fresh eyes and a flat book. That's the advantage of being a today trader, right? So thanks for the question. What about Lowe's? Hey there, Robert. Yeah, Lowe's is a really cool name. It's probably one of the best relative outperformers within the ITB, XHB, home construction, home builders. It's not a trend on the daily, but most definitely buyable as a day trade potentially, and most definitely as a short-term swing on the 1 hour. Let's see. Yeah, as far as the replay goes, Papillon, yeah, bot just sent it, consistent-replay. I think simplertrading.com/consistent will get you there, as will simplertrading.com/consistent-replay. All right. Let's see. What else do we have? Zen asks, what is the name of the... Oh, we covered that. What else? I think we're good on questions. I think we're all set. Yeah. All right, gang. So that's a wrap. I will see you all tomorrow for Charts and Coffee. It'll be our non-farm payroll edition. So we'll get that hot zone aftermath and see what kind of setups are brewing. Gang, equities are overall rallying, and they're rallying as we are getting flat inflation data and arguably poor jobs data. Non-farm payroll is going to have to be flat to weak to keep this going. That just seems to be the way. This is the way. I'll see you tomorrow. Be good to each other.